Felix here. This could be the trade of 2023. And what have we got? We've got Russia, a lot of gold, US dollar possibly losing its reserve currency status, a little insider trading, and then most importantly, of course, how you and me can make money out of this. I'll show you some trade ideas that wrap up this entire story, so bear with me. Of course, none of the following is financial advice. You should always know that. I give you facts, I give you sources. You can always message me as well, and I'm super happy to answer literally everything and anything, but always come to your own conclusions. Be smart about it. So you might have seen this headline. This is a Reuters headline. Permitted share of China's renminbi or yuan in Russian wealth fund doubled to 60%. So everyone's like, okay, they're moving from the dollar to the Chinese currency for obvious reasons. But there is one bit as well. They said the permitted share of gold in the National Wealth Fund, this is Russia's sovereign wealth fund, would also be doubled to 40%. So we've got 60% China, possibly, and 40% gold. That was 20% previously. So a massive increase in the amount of gold that they're going to hold. And why did they do this? Well, you might have followed Russia had pre-war about $300 billion in cash, essentially, in foreign assets sitting in international bank accounts so they could trade and pay for things. And this is quite normal. Most countries do this. And it's all been frozen. And it hasn't just been frozen, but there is talk of possibly pilfering it, using it to rebuild the Ukraine. And you might think that's very, very well. But if you were the Russian government, you'd probably think that that was thievery of the worst kind. So where are those bank reserves? Well, some of them are in gold in Russia, 21%. And then some of it's in China. That'll probably be fine. I don't think they're going to do anything with it. But the stuff here in France, in Japan, in Germany, in the US, and the UK certainly would go adrift. International institutions, IMF and so on, that's probably safe, possibly, but maybe not. Who knows? But essentially what you can see is that they previously held 21% gold, 13% renminbi, the Chinese currency, and that's going to go to 60%, and this is going to go to 40%. So why am I telling you all of this? You're wondering, like, why do we care, Felix? Well, give me a second and I'll show you some juicy trade ideas from this. So from freezing to stealing, well, that's the way Russia obviously presents it. What's happened here? Well, two things have happened. The Chinese renminbi, this is the US dollar, this is USD CNY, so the renminbi has increased in value. Currency charts are always upside down, but that's the way it is, right? So the dollar is worth less than renminbi. And that's since this announcement here on the last day of the year. Also, oh yes, Winston's prepared for you a benchmark. It's completely free, and then I get onto the trade. It's UBS's top 23 stocks to buy. Some interesting names on there, like Nike and Yum and stuff like that. I haven't really looked at before. It's completely free. We put these out to make you better investors. FelixFriends.org/top 23. It looks just like this. In fact, it is this. Dell's on there as well. So have a look at their return on invested capital, their margin, their long-term earnings growth, and all that sort of good stuff. And of course, basis for research, not buy recommendations from me, maybe from UBS, but certainly not from me. So what's going on with gold then? So in the top chart here, I've got gold. And gold has had a pretty good run anyway. Why? Well, actually, you would have expected it to do a lot better last year than it has with all the inflation going around, but it hasn't. Now, that great big candle there, maybe we'll get to that, what that means in a second, but it's definitely on a run. It's above its 200-day moving average line, which is that. Let me just get through some lines here. That's the 200-day moving average line. That up there is the 100-day moving average line, if I'm not mistaken, and it's breached through all of it. So it's looking very, very bullish from a setup point of view. The volatility of gold down here is at pretty moderate levels at 16. That's sort of about average. If you look at where we are, you see about average for 2021, certainly lower than 2022. So that's all kind of like well and good. Now, did China know about this deal by any chance? So this chart has been around from Bloomberg for a couple of weeks, and somebody bought 400 tons of gold, and that's quite a lot of gold. And the market, generally speaking, seems to believe that that was China's central bank, or China buying it, China's government buying it. So possibly they had some insight into what Russia might do, because if Russia is doubling its amount of gold it holds, it's going to buy a lot of gold over the coming year, therefore driving the gold price up. So this was a pretty good investment from little insider tip from a friend, perhaps. That's me speculating. Now, how do you invest in gold? How do you trade gold? Should you? There is the GLD ETF. That's probably the most liquid and most easy way for retail investors to access gold, other than holding it physically, which is a whole different conversation to what we're having here. That's more like, if the lights go out, you can pay with it, sort of thing. So I want to give you two trade ideas, and I beg you not to copy them, and I beg you to do them in a paper trading account, because unless you fully understand the depths of options, this is going to be very, very risky, and you could lose a lot of money. Well, how much money could you lose on this trade? On this trade, you could lose $300. So let's start with the ugly here. And how much could you make? $26. Doesn't sound good, does it? But essentially, you could make 10% profit. But here's the juicy part. It comes with an 84% probability. So that looks a little bit better. Now, why this trade? Because it's the simplest one I could think of. That gets us the benefit. And it has a break even significantly below the current price of gold. So gold is trading, let me pull up the chart for gold here. That's GBZ. Yeah, so actually we're doing this with GLD. So let's pull up GLD. It's virtually the same price. So trading here at 170 virtually. So what is our trade? Our trade is a break even of 163.74, and that is options magic. So 163.74. So hang on. There we go. 163.74. So that's the options magic, and it just means that you are positioned below the current share price. So it's no longer this 50-50, oh, is it going to go up, is it going to go down thing tomorrow? And you make money as long as it stays above that 163. So that gives you room for error. So it could come down like $6 and you still make money, right? Which is pretty good. So it gives you this break even of 3.5%, and that's what makes this trade highly probable. And it just means you give away a little bit of profit potential, but it's still a pretty nice trade from my point of view, and volatility is also sort of on your side. Before I show you the next trade, if you want to really understand this stuff, by the way, give us a ring. Like if you have a 5-figure portfolio, just go to felixfranz.org/coaching, give us a call. I teach options trading. I used to be a banker for a little while, and we've got investment bankers as coaches in our community, and we'll really explain and see how this really works and how did we get to 100% plus in returns last year on capital employed. I'm not saying you're going to make exactly those returns, but I can promise that I'd be completely transparent with you with every trade and every strategy and everything that we have in terms of knowledge here. And if you're just getting started, if you haven't got a 5, 6, 7, 8, 9-figure portfolio yet, which is what our coaching students have, then head over to our pre-recorded course, felixfranz.org/options. Get access to about 100 lessons. You get to see me trade live every week. You get unlimited chat support. And again, nothing held back here in terms of strategy. So check that out. So what will be another way to do this? This is probably the second most simple way of trading this, which looks confusing if you don't know what this is. It's called an Ein Condor for unknown reasons. And this essentially gives you a range in which you make money, $163.75 and $176 by this January 20th. And this gives you potentially a 14% max profit, which is looking a little bit better, isn't it? It's a bit more money. In 3 weeks, 14%, not too shabby, right? So let's look at what that trade looks like. That is up to 176 and a bit. So essentially, it's between these two green lines. Between these two, you would make money. So you're saying, I'm looking for a rally, but I'm not looking for the rally of all rallies in gold, because gold has moved somewhat slovenly of late. So that'd be one way of trading it over the next 3 weeks. Of course, variations of this, you could do something even a bit more directional with a little bit more risk and a little bit more profit, but I aimed here for something that was not completely crazy. So if you want to copy these, please use a paper trading account. Think or Swim and Interactive Brokers both offer free paper trading accounts, and you can mess with it, you can learn, you can practice. I always say athletes don't just go to the Olympics, start running and winning. They practice very hard. They have a coach, and once they've practiced enough, they go and win. And that's very much how we treat this. So Gold could have a really, really good year in 2023 with central banks essentially saying, look, we don't want to hold US dollars because there are a fair number of nations out there who are not the US's best friend. And they might say, look, what happens before that with the US? They're going to freeze all of our assets. They're going to take away all the US dollars that we hold. And therefore, we're going to hold it in something that doesn't have that really, really controls as such, at least from a government level, and gold would be the obvious one. And then if you think about all the oil exports that Russia is doing, they're basically doing that in renminbi now, in Chinese yuan, sorry, it's the same thing, two words for the same currency. And they're doing that by essentially borrowing against their gold reserves. So to some extent, the Chinese currency is now backed by gold. The gold standard is back, yay. So there will be other nations who are resource rich who might be looking at this playbook and going, this is a pretty good idea. Let's keep doing that. And I could certainly see, China used to buy all these US treasuries, right? They're not doing that anymore. They're going to put their money somewhere so they could keep buying gold. And they could buy the gold from the Russians, for example, who've got quite a lot of gold in their mines. And Russia can keep buying its own gold and therefore stack this up. And then perhaps actually come up with a digital coin. That might be the solution. An actually gold-backed, state-backed coin that China and Russia agree upon, and they could trade on that, and they could trade oil on that too. So there is a whole change here, I think, in the commodity world, in the currency world that might be coming. And we can always make money out of these things if we understand them. Possibly, potentially. There's obviously a risk with every investment, I should always say that. But you want to learn a little bit more about how we make money, not necessarily out of something as random as this, but more on a rinse and repeat kind of a strategy, which is what we're doing. And I'm starting those trades on Thursday. Thursday will be the first of the season, hopefully of many, many, many trades in the next couple of weeks, maybe 100 or so. Give us a ring at felixfrancelog.com/call if you enjoyed our little off-topic gold update here. Do let me know. If you say, Felix, go back to talking about something else, then also let me know. I appreciate all the feedback, guys. Thanks very much for tuning in.